Hello everybody, I'm your host, Eric Bird, here at StopStrugglingNow.com. Today, are we in a recession? Is something coming? Well, look at here, over my shoulder. This is just a preview. This is a Friday. Look how many cars are in this parking lot. This is at my place of business. But look here, across the street, that's a place that helps people who have financial difficulties, who may not have food in the cupboards. This runs 24 hours a day. Where are they taking all these goods to? Stay tuned. We'll talk about it right here. Please like, subscribe, ring the bell. Check out our social media on Instagram, Twitter, Facebook. All right, welcome back. This housing bubble, a recession, you can't believe it, right? Well, this is Stop Struggling Now. So I'm just gonna give a little advice, but keep in mind this is for entertainment purposes only. If you're gonna buy a house, the interest rates right now are gonna be in the 4 percentile, 4%. So 4.3, 4.1, 4.5, 4.7, somewhere in there. If you're gonna use a conventional loan, it's gonna be 5, 5.5, 5.6, 5.3, 5.2, whatever the case may be. But housing prices are dropping. They've been dropping. It's just that most people try to use the year-over-year numbers. So what you don't want to do is get yourself in debt. This is how they keep you struggling. The more debt you have, the more you have to work, the more you might have to get a second job, the more you might have to start thinking about other alternatives, and the more you start using your credit cards and any means necessary to get loans and things of this nature. So if you're trying to stop struggling now, as I've mentioned several times, you want to reduce your debt load as quickly as possible. A house is not an asset. Once again, this week, a person says, my house went up 50%. And I say, are you moving? Are you selling? And even if you do move or sell, your house, once you have that money, you're gonna have to buy in today's market. So you're gonna have to buy into this, your house went up 50%. And why would you invest in property when prices are dropping? So we have a double whammy. Prices are dropping because interest rates are going up. So all loan assets that you have, which are not assets, any type of loan you have could potentially go up. When interest rates go up, when money and liquidity become tight, then you never know what a bank, mortgage company will do to get more money or call their loans. This is why this HELOC, where people go out and buy or get them home equity lines of credit right now while their property is valued way more than their loan value, what could end up happening is they could take away your HELOC once the property value comes down. If you use your HELOC, then that means that they might call it due once the property value comes down, but nevertheless, it's still a loan. So don't get caught up into this refinance loan game, because the bottom line is when you have a loan, they own you. Just like your credit cards could be confiscated at any time. They could be stopped. Your credit limit can be reduced. Don't be fooled. When there's a recession, they will start reducing the amounts they allow people to borrow. So this is, I know I'm all over the map today. It's just that there's so much going on that I'm trying to relay, but in these short videos I'm trying to produce, you just can't say enough, and I'm trying to touch on 5 or 6 things versus trying to run 5 or 6 different videos. So the bottom line of the story is, if you want to stop struggling now, reduce your debt. Do not go out and get new debt unless, there is an exception, unless the new debt is going to generate income, an asset that's going to be more than what your debt load is. So in other words, if you go out and say, hey, I have enough money to invest in a 8-unit apartment complex, and net operating income, that's all your, your profit minus expenses, and you have income, and you can live with that, that's probably your better option. That would be considered an asset, as I've discussed many times. It produces an income. So you can have a loan as long as it produces income, but unlike a home that you live in, that does not produce any income. You have to go out and move your feet to a job or to your own business to produce that income to pay for the house. That's not what we're trying to do here, and this is what you have to be cautious about, because if we're in a recession, that means less money's available to invest. That means the same general rules are going to apply, except it's going to be on steroids. Once we hit a recession, that means you're going to need a higher credit score to borrow money, but the borrowed money is going to be at a higher rate. You actually don't want to be in that situation. This is how we ended up in the 2007, 2008, 2009, 2010 Great Recession. So this is short, this is sweet. I just wanted to come out because I haven't been producing enough videos about this, but this is major. Stop struggling now means reduce your debt, be liquid, and in fact, you'll want to diverse what you have as cash. So money in banks, that may or may not be a good place to keep a large sum of money, because banks do not hold all the money there. For instance, if you went in with a briefcase load of money or a luggage load of money and said, here's $1 million, first of all, let's just get this straight. Due to Patriot Act situations, first, you might not even be able to deposit it because they're going to say, where'd you get this money from? But anyhow, let's just say this is, everything's equal. We walk in, we say, hey, we want to give you $1 million. You give them your $1 million. You come back a week later and you say, I want to withdraw the $1 million that I have in here. Do you know how many hoops they're going to jump through and not produce your money? That's because they only keep a percentile of what's deposited at the bank there. So what could end up happening in the recession, which is what happened in the Great Depression, is when one bank went down and another bank went down, then all of a sudden you had thousands of people going to their bank to withdraw money because guess what? It wasn't available. There were no ATMs. And just like in our case, if there were ATMs, money wouldn't have been coming out of them. So you have to keep this in mind when you're putting your money in locations that you cannot access. All you 401k people, all you IRAs and people who put their monies into any other investment vehicle by a financial advisor, if any of those companies want to withhold your funds and not allow you to withdraw the money, they can do that. Just because the law says you have up until a certain point that you can get out doesn't mean you're going to get that. If things go belly up, you won't be able to get your money. So that's things to keep in mind as economies get worse, as recessions kick in. You want to figure out assets. I told one of my friends, for instance, who does this commercial properties that buys and sells, I personally, I'll just tell you straight out, I told him, please look for me, let me know if something comes up in a storage facility that would be for sale that I can invest in, that I can buy. Because when recession occurs, people move out of their homes, look for rental properties. They're looking to either store items for long-term or short-term, but they're going to have to downsize. So storage facilities are places where people need to keep items. That's a place that you can charge rent, which means it turns into an asset. And even outside of a recession, it's an asset. So I'm hoping, if I get lucky enough, that I'll be able to find such a property that makes sense, where somebody's not trying to charge an arm and a leg. But as we get closer and closer to a recession, the odds of me being able to find a storage facility that's at a decent price so I can then have my NOI, the revenue less expenses equals your NOI, where I would have a profit, that window of opportunity gets closed. So that's why I started this out as a recessionary type video, because across the street over here is a place that, like I mentioned earlier, they actually help people who are down and out, families. They deliver foods. People can actually go there and pick up foods. They actually help them out with little jobs so you can come there and work there. They do this all over Southwest Florida. Yeah, I'm in Southwest Florida, just in case you didn't know. I'm also in California too. I'm bi-coastal. I do things in a few places. But right now I'm in Southwest Florida. So those people, which is a nonprofit, they actually do good. So when there's hurricane season, people needed, there was no food, there was no electricity, so people couldn't buy groceries. There's a run at the grocery store. There's a run on products such as camping equipment, so to speak, where you might be able to sleep on an air mattress or things like that. They were kind enough to actually run it on TV and tell anybody that needs help to come on down. Whatever supplies we have, we'll help you out. So we don't want to be in that position, but you never know. Even in the best case scenario, when you're planning, like I'm suggesting you do right now, plan. Stop spending. Save whatever you can, because you already have enough. We're one of the richest countries in the world. Most people have enough. A lot of people don't have enough. But the thing is, you have to be where you are. If you don't have enough, there's no sense in incurring debt to get more. You should just live within your means. This is part of Stop Struggling. It's great to want to be bigger and better. But if you're in a situation, stay in the situation, save as much as you can, or go out and change your situation where you can increase your income to save. But either way, do not incur any debt over the next 12 to 24 months. Just try to reduce it immediately within the next 6 months. So, with that said, thank you for watching. And again, keep your head up. Keep moving, and let's get to it.